Good morning, ladies and gentlemen. If I look a bit different to the man in the program, that's because I'm not Richard Thompson, I'm Mark Watts. Unfortunately, Richard Thompson couldn't make it, so I'm coming in to deliver his presentation on the Saudi economy. For those of you who don't know Mead, we're based in Dubai, and we're a business information service. We have a website, a monthly magazine, and you can now download the app on your iPod or your iPhone. So mid-2014, everything changed in the GCC when the crude oil prices started to decline from 4 years of $100 a barrel plus prices, and it's created a lot of movements in the market. And I've just put some of the headlines that have been on Mead over the last few months related to Saudi Arabia. So you can see the top one there, Riyadh raising more from currency bonds, Moody's downgrading Saudi banks, and as we saw at the start of the year, Deputy Crown Prince Mohammed bin Salman announced the economic reform strategy, which includes things like privatization. The big news was the planned privatization of Saudi Aramco, but also we've seen things come through like the GCC countries introducing VAT, and also sort of more money raising through bonds. So this represents what's happened to the oil price. You can see there towards the end of 2014 and into 2015, it's dropped by 70%. Although there is some comeback in the oil price at the moment, most analysts don't think that this is going to be a sustained bounce back to the highs that we saw before 2014. So it looks like supply is going to keep outpacing demand, and the consensus is that prices will remain between $30 and $50 a barrel in 2016, and then perhaps average between $50 and $70 a barrel up until 2020. Yeah, in January this year, the IMF downgraded the GDP forecast for the Middle East and North Africa region. Downgrades are due to China's economy not growing as fast as many expected, general falls in commodity prices, and rising US interest rates. MENA oil producers lost about $360 billion in oil revenue in 2015 due to that drop in prices, and the GCC ran a $700 billion deficit in 2015, representing 13.2% of GDP. Financial buffers mitigated the need for sudden adjustment in fiscal policy, but reforms such as the removal of subsidies and new taxes were needed. We saw in Saudi Arabia that the subsidies on fuel have been reduced, which means gasoline prices going up, as well as gas and ethane needed for petrochemicals projects. So across the board, a lot of these fuels have been increased, but still quite low compared to international levels. So the fall in crude prices has created some tough decisions for leaders in the GCC, putting pressure on governments to make savings. So the policy options are relatively limited. Oil production is already running close to capacity, so increasing oil production is not an option. Non-oil revenues through taxation has limited potential. So spending cuts have been the early option to try and mitigate the effects of lower oil prices. Regionally, the primary focus has been on capital spending cuts. While public sector wages are protected, some governments were looking at fuel subsidy cuts and also slowdown in the rate of hiring in the public sector. Over the last few months, the direction has become clearer. The budgets for 2016 have signalled spending cuts and continued deficits, government restructuring, job cuts, reform programs, and the budgets are focused on healthcare, education, and energy. So the Saudi economy, obviously the largest economy in the GCC and also the Middle East. Growth projected to be 1.2% by the IMF in 2016, which means it's slowing down, but still growing. The kingdom has embarked on a series of spending cuts to offset shrinking oil revenues. So in 2015, oil sales and oil and gas related industries still represented 73% of the kingdom's total revenues. So you can see that it's still a country quite highly reliant on oil, even despite the oil price falling. That's 23% less than the income generated from the sale of oil the year before. So the government is currently drawing down on foreign reserves and tapping into Saudi banks and financial institutions with local currency bonds to plug the budget deficit. It's now invited banks to submit proposals to extend a 5-year, $6 to $8 billion loan in its first bid to tap the international debt market for more than a decade. This is a graph that shows nominal and real GDP. Nominal GDP, which includes commodity prices, most notably the crude price, you can see dropped quite considerably in 2015, but forecasts from the IMF and the World Bank see this rising again towards the end of the decade. So although the crude price has had an immediate sharp effect, there is growth on the way. Banks well capitalized and profitable, but a difficult operating environment with less oil revenues coming in. Obviously, the financial buffers used. Saudi Arabia has the largest financial buffers in the region, and this is used to sort of cushion the blow of lower oil prices. So the Saudi budget for 2016 in numbers, 975 billion riyals in government spending last year. Budgeted spending for 2016, 840 billion riyals, so you can see there's a drop there. Projected public revenues, 513 billion riyals, so that brings a deficit of 326 billion riyals. By the way, there's a lot of numbers in my presentation, so if anybody wants the slides, just come and talk to me in the coffee break or drop me an email. I'll give my contact details at the end. 16% fall in revenues compared to 2015. And then you can see the balance at the bottom between oil revenues and non-oil revenues. So oil revenues still sort of dominating the government spend. So Saudi Arabia recorded a record budget deficit in 2015 due to the drop in crude revenues, as I've said. For 2016, the government has set out a 14% reduction in public spending. The chart there shows what the spend will be on. So you can see education and training, budget support provision, military and security services. And this doesn't change considerably, but obviously the overall spend has shrunk. So what has the government done to respond to the situation? First of all, subsidy cuts. So gasoline prices have risen by 50%. I'm sure everybody has noticed. The price has gone up at the pump. Tax, VAT has been approved by the Supreme Council of the GCC. So VAT could be introduced in the years to come, although the timeline for this isn't quite clear at the moment. Spending cuts. So at the start of 2015, there was a large public sector bonus for everyone in the kingdom working in the public sector. This won't be repeated this year. And also cuts in capital spending on projects. One of the big pushes at the moment is privatization. So there was a big shock at the start of the year when it was announced that Saudi Aramco would be privatized, obviously the largest company in the country and perhaps the largest company in the world. But the timeline for this happening and what parts of Aramco might be privatized are still to be decided. There's a restructuring at the Saudi Electricity Company and the Ports Authority. So the GCC is finalizing draft laws on VAT of up to 5% that could be introduced from 2018. Tax on consumer goods and services to be introduced. This is part of the GCC government's effort to diversify revenue streams. It says, there's a quote here from Yunus Al-Khoury, Under Secretary for the UAE Finance Ministry. Each of the 6 Gulf states will have their own VAT law, which will fall under the broad framework of the GCC law. So each GCC country will have its own terms. Some sectors will be protected, including healthcare, education, and social services on 94 essential food items, so it won't affect a lot of sort of essential goods. So we're all waiting at the moment for the details of the National Transformation Plan up to 2020. So the Ministry of Economy and Planning is due to submit the draft to the Royal Court by the end of March. Plan sets out national priorities to reduce its dependence on hydrocarbons, so crude oil sales. The draft will be submitted by Mohammed bin Salman, who, after a review, is expected to announce the details in April. The Ministry of Economy and Planning has led the drafting of the law. So the chairman of Saudi Aramco is expected to lead the implementation of the economic reform agenda. So the program outlines government expenditure cuts, spending plans for projects that will still go ahead, a list of state entities to be privatized, and a schedule for pinning down the timelines for the sale of these assets to private investors. So there should be a lot in there, and it should generate a lot of interest when that comes out next month. One of the things that Mead specializes in is the projects market. So we track projects across the Middle East and North Africa. You can see from the chart that Saudi Arabia is the largest projects market in the GCC. It overtook the UAE. You can see there, we're around about the time of the financial crisis when the Dubai real estate market kind of took a plunge, and ever since Saudi Arabia has been the biggest. But you can see on the top line at the end, there was quite a large drop sort of from last year due to the lower investment because of crude prices. This is project investments over the last 5 years. You can see there has been a drop over the last 2 years from that huge amount of spending in 2013. This is the value of projects underway, totaling nearly $1 trillion. Construction's the largest sector, followed by transport and power. Oil and gas, perhaps not as big as everyone would expect, sort of down there at about 5% of total investments underway. I did have some statistics on the tourism market, but it hasn't been included in these slides. Okay, so I just wanted to thank you for inviting me to this conference, and I hope you enjoyed my presentation. Thank you.
يسرنا أن نقدم الجلسة الثانية، وهي بعنوان الاستثمار في الفنادق الاقتصادية والشقق الفندقية. يدير الحوار الأستاذ شهاب بن محمود، نائب الرئيس التنفيذي رئيس الفنادق والضيافة للشرق الأوسط وأفريقيا لشركة جونز لونج لاسل. I would like now to invite the moderator of the second session, which is entitled Investment in Budget Hotels and Serviced Apartments. The moderator is Mr. Shehab bin Mahmoud, EVP, Head of the Hotels and Hospitality at MEA JLL. وكما يسرني أن أدعو المشاركين في هذه الجلسة، وهم الأستاذ حسين الرخيص، مدير تطوير الأعمال لشركة أكشن للفندقة، يوسف العيد، نائب الرئيس للاستثمار والتطوير شركة دور للضيافة، دكتور كوستاس فيرجنز، كبير مدراء تطوير الإقامة في فنادق ماريوت الدولية، مارك شي، رئيس الضيافة للشرق الأوسط في شركة فيثفول وجولد. Now I'd like to invite the participants of the second session, Mr. Hussein al-Rakhis, Business Development and Manager at Action Hotels, Mr. Yusuf al-Eid, Vice President, Investment and Development, Dur Hospitality, Dr. Kostas Virgins, Senior Director, Lodging Development, Marriott International Company, Mr. Mark Shea, Head of Hospitality, Middle East, Faithful and Gold Company.
بسم الله الرحمن الرحيم، والصلاة والسلام على أشرف المرسلين. السلام عليكم ورحمة الله وبركاته. يسعدني ويشرفني أن أقوم اليوم باسمكم ولكم بإدارة هذا الحوار في نطاق ملتقى السفر والاستثمار السياحي السعودي، في موضوع الاستثمار في الفنادق الاقتصادية والشقق الفندقية. ولنا اليوم نخبة من الأخصائيين في الميدان، فأستسمحكم إلى أن تكون بقية الحوار باللغة الإنجليزية. Gentlemen, good morning. We will have to be efficient because I think that our time has shrunk. but we will, I'm sure, get there and have, inshallah, a very efficient session. I would like to follow up on Dr. Badr's comment on the scientific and research function of this event, as well as follow up on the address of Dr. Lebkhayet and all the work that has been done and is being done by the SCTA in terms of classification of hotel and tourism establishment in Saudi Arabia. And so this is why I would like, from a methodological point of view, put the question of hotels, budget hotels, and serviced apartments. I see that there is a tendency always to put together budget hotels with serviced apartments. And so I, as an introductory comment, I would like to have your opinion, gentlemen, on this combination and whether it makes sense or it has limits, both in terms of investment management or in terms of brand management or on all fronts. So who would like to start? Kostas.
Sure, with pleasure. Good morning. Very happy to be here again this year. From a Marriott point of view, we have a number of brands that fall into two large brackets or baskets: hotels and what we call extended stay products. And we have, let's call them sister brands, across all levels, from upper upscale, select service, etc. In Saudi Arabia is the star system. So budget, I'm not sure if you're referring to 3-star or 4-star, but we can talk about that. But we have brands that are both 4-star hotels and 4-star extended stay products, 3-star hotels, etc. We ultimately are customer driven. And what our objective is to try to identify the needs of our guests and then help our owners design hotels that are in line with those guest needs so they are attractive and profitable businesses. My pleasure.
Assalamu alaikum, sabbakum bil khair. Good morning, everybody. Thank you, Shehab. Door Hospitality, I would say, the pioneering on extended stay by developing the Marriott Executive Apartment here on. It opened in 2012, and we are building on the success of a luxury extended stay, whereby Riyadh as a city, or as a growing city, definitely in need always of extended executive apartments. Having said that, we had built our success and continue to develop luxury executive apartments by developing now an MEA inside the diplomatic quarter. We announced our partnership with Marriott, where we are developing 140 executive apartment in the DQ together with 80 rooms. So we at Door, looking at Riyadh as a market, definitely there are, the market is always in need of a luxury extended stay, but does not mean that the market does not require a budget extended stay. Where at Door we are looking at different options of developing, I would say a mid-scale rather than a budget. Luxury, when we say luxury, definitely it comes with a high price. With the Marriott standards, there are different options coming forward. We can foresee in Riyadh to have more of extended luxury apartments coming up with different brands. So we are definitely looking at developing a mid-scale extended stay, whether it's an apartment or hotels, in different cities. We didn't mention the cities, but we are looking. Thank you.
صباح الخير وشاكركم على الاستضافة. Good morning everybody and thank you for this conference. Actually, when it comes to the Action Hotels as an owner's perspective for a hotel and budget, with a budget segmentation, with the service apartments especially for long stay, I mean, we have this example in Kuwait with one hour of the hotels, which is IBIS, which is 3-star hotels. And then on the demand on the market with the long stay, we create a service apartment in that location based on the demand, based on the feasibility that a long stay in the market it's needed, especially with the branded hotels. So there is a lack of a service apartment with the branded hotels, I believe, in the regions, and that's why we are looking nowadays to scale that more in the region. Especially nowadays, we have around 11 hotels, all of them with a 3-star, 4 stars as a budget market. But indeed, there is a lack of service apartment, and this will be investment as an investment point of view.
So service apartment concept that Action Hotel will be looking into in the future, right?
Yeah, actually, because we are looking now into the winning project in Abu Dhabi. It's in Staybridge Suite, and what will be in the market, inshallah. Yeah.
How do you deal with the duality or the combination of both concepts?
I think it's quite interesting. I think coming back to Kostas's point to start with around what does the customer want? So long as we're dealing with what the customer wants, it's relatively.
Customer wants, you are talking about the investment.
I'm coming from both points of view, from the guest,
Yeah.
what is the guest profile driving, but also what does the investor need as well. I think there are some significant opportunities for both the budget and mid-market segments, coupled with the service department long stay concept around mixed-use development. I think there's some interesting concepts there that will come to market.
Kostas, please, can you please follow up on that? How do you deal with product, and there are some of them, especially in Saudi Arabia, product which are hybrid, which have both a hotel room inventory as well as some apartments or studios embedded in that?
That's a very good point. And the start happened actually here in Riyadh with the Marriott and the Marriott Executive Apartments. So we call these as combos. So combos are very, very popular in Saudi Arabia, both in the 5-star market, but as well as in the 4-star market. So we have seen a lot of demand for that because, again, if we look from a guest perspective, you have guests that are families that really want the bigger space of an extended stay product at different price points, so 5-star, 4-star, or even below. You have a lot of people that are project managers, architects, consultants on long-term projects, and these people really appreciate the extended stay product. And at the same time, you have your typical short stay visitor or guest that will stay 1, 2, or 3 nights. Now, the advantage is that if you combine a hotel, select service hotel, budget hotel, whatever you want to call it, with a sister brand in extended stay, then not only you attract a wider group of guests, but also from a developer point of view, you achieve a lot of cost savings because you share a lot of back of house facilities, a lot of key employees, etc. So that is an attractive proposition from an owner point of view, based on the feedback that we are getting in Saudi Arabia and across the GCC.
At the same time, how do you track the performance in terms of competitive set when you have a completely integrated combination?
We treat them as two separate products.
So they need to be structured as two separate components in order to have their performance tracked separately. It is
correct.
Mark, I think that you were to follow up.
Yeah, I think it's a really important point that Costa was making there around saving back of house space and what's this saving on the numbers of staff that's required. Because I think some of the biggest operational costs are in providing back of house space and with staff. And I think one of the biggest keys to successful development and investment into the budget and mid-scale asset class is that real tight control on the amount. Sorry. Yeah, it's just real tight control on the amount of space that's being provided. Area is key, and area costs money. So if we're real tight control on that, and by sharing the two assets and sharing space is just going to help improve the bottom line.
So now that we talked about the combination of budget hotels and service department, and we saw that it has some advantages, but it is not necessarily a direct combination because service departments can be luxury service departments or budget service department, and service department do not necessarily mean budget. Let's talk about budget hotels and let's talk about service department, if you allow me. And let's discuss about budget. And now, Costa's, I don't think that you can say much about budget hotels. We know that Marriott is spending, $13 billion now, and bids are going up on luxury brands and St. Regis and more. And so I don't know if you are the right person to talk about budget, but tell us, so where does Marriott stand on budget? Budget hotels.
That's a very interesting point. Out of our portfolio, again, whatever is happening with Starwood is an ongoing situation, so obviously I cannot comment on this. But our portfolio currently stands at almost 4,200 open hotels. And we need to draw the line as to what budget is in order to answer your question specifically. So we use the term select service. So anything that is below 4-star in Saudi definitions, for us that is a select service, and therefore we could argue that is a budget hotel. Again, as with a 5-star market, budget can be anything from a 2-star product all the way up to the 4-star product. And out of our 4,200 open and operating hotels, the majority of them are in the 4-star market or below. Out of 4,200 hotels, more than 1,000 of them are courtyard by Marriott. More than 700 of them are Residence Inn by Marriott. So another 750 of them are the Fairfield Inn by Marriott brand. So, you know, globally, I think we're pretty strong. In this region, obviously we started with the full service, luxury or upper upscale brands, but our pipeline of 4-star hotels is very, very healthy indeed. And in Saudi Arabia, particularly the case.
It's a very prudent answer, but...
No, I'm happy to give more direct answer if... Tell me what you want to hear.
Yusuf, I know that Dur is a publicly listed company, and so everything is. But in terms of strategy, are you maintaining the positioning of the upscale and perhaps select service, or would you look at budget hotels, at real budget hotels?
3 years ago, Dur Hospitality announced its strategy to expand or to develop 14 hotels and scattered all over the Kingdom of Saudi Arabia. So if we talk about budget, as a name budget, we have to differentiate what is budget from mid-scale. So our developments always has a two hat. One is the developer, whereas the retain is important to us. Secondly, the operation and the operation cost and the brand. We have a very good relationship with Marriott, so we look at the Marriott different brands and where we could position them. And we also announced our master franchise with IHG, per se Holiday Inn. Holiday Inn in the Kingdom, some people consider it as a 4-star, some people consider it a budget, some people consider it a mid-scale. So if we to go into a certain city, before we said a budget, a mid-scale, we study the city and client segmentation. What type of clients are they coming to stay with you? Are they business travelers or families and leisure, or for instance, Mecca, Medina has a different market? So yes, we are looking at a mid-scale, I would say, to develop in different cities, on a smaller, would say, sub-cities in the kingdom, by looking at an international brands, whether, again, it's a Holiday Inn or we look at Marriott as one of our partners.
Allow me to follow up on that. When the Holiday Inn, are you planning for the Holiday Inns to be 4 and 5 stars, or to be real 3 stars and
as I said, it's a mixed feeling of segmentation for Holiday Inn. In Riyadh, we say Holiday Inn, the developers develop it as a 5-star, and somehow they want to compete with 5-star on a price war. So when there's a high demand, they sell their rooms as a 5-star. But when it's really on a low, you can stay as it's a 3-star. If we to develop in, let's say, secondary market, we announced developing Holiday Inn in, I wouldn't say announce, but we are looking to develop Holiday Inn in smaller cities. When we say Holiday Inn in smaller cities, definitely it's a mid-scale. We would not develop Holiday Inn as a lavish 5-star hotel with all its facilities in smaller cities. And by the way, Holiday Inn does have what they call extended stay, which is Holiday Inn suites. So hotels and suites. So we look at the suites as an extended stay.
Yeah, I think just to clarify a little bit the conversation, if I am not mistaken, in this country, the limit for a 4-star hotel is 24 square meters, plus some other facilities, of course. So, are we talking about more than 24 or less than 24 is perhaps one way of clarifying what kind of product we're talking about. And to fully support what Yusuf was saying, our Courtyard by Marriott brand in a secondary city can be 24 square meters. In Riyadh, tends to be 28, 29. Again, consumer-driven. Is not brand standard, is consumer-driven that has an impact on this decision. So I just thought of...
Yeah. What effectively it says that in Riyadh, the expectations are higher. And so this is, so it's budget, but not that budget. It is...
it's not only expectations, it's economics as well.
Yeah.
Ultimately, investors invest in hotels because they want to achieve a certain return. In a city where the higher occupancy and room rate, you can afford, perhaps as a developer, to spend a little bit more on a larger room. But if you are in Jazan or in Jubail, the requirements are different. The guests are willing to pay different fees, different prices, and therefore that needs to be reflected on the physical product as well.
Noted. Hussein and Mark. So I think Action Hotels is a unique experience. It's a unique endeavor in the sense that you are focused on pure budget hotels, and you chose the hotels to be managed by third-party operators. So it is a very interesting model. And so the question that arise automatically is the cost efficiency. So how do you make sure at the time of the development, and please your input will also be very useful, at the time of the development, how to make sure that the product will be cost efficient, and then later in the stage of the asset management, how to make sure that in terms of operations, the operations are lean in order for the asset to deliver the expected returns.
Yeah, actually, when you talk about cost efficient, especially in the region, especially with the budget hotels, with Action Hotels, first, when we choose the location, I mean, basically, we, as a strategy to grow in the region, most of our hotels, they are locations in the 5-star location with a 3-star development. So this is our key business, for example, for in Kuwait and Muscat as well, because we are the first leading company nowadays. We have more than 2,000 rooms in the region and within Australia as well. And you talk about the cost efficiency, that really to deliver the key ratios when it comes to the investors' returns.
Mark, so let's talk about in terms of development. I know that Fیثفول and Good are very active in this space. And what thoughts can you share with us in terms of developing budget hotels as opposed to developing full-service hotels?
It's a point that's already been touched on, and it starts with the location. Obviously, land is expensive generally across the region, and so we need to look at squeezing every ounce of performance that we can out of the land, and keeping the price point for the development and for the investor as tight as we can. And a lot of that starts with area. So coming to the point that Costa's was making before, is it 24 square metres, is it 28 square metres? And again, there's some real parameters that sit around some of that. As I said before, keeping tight control on area, getting floor plates and layouts of hotels that are very efficient. With budget hotels, there's no need for lavish and multiple food and beverage outlets. They can be very simple. And I think one of the things that we've seen quite regularly is that budget and mid-market hotels work quite well where they're mixed in with other uses. So a good example on a budget hotel or a mid-market hotel would be great to mix with a retail component. You don't need to have lots of active ground floor with a budget and mid-market hotel. So why not give that over to more revenue generation retail functions? So there's some real clever tricks that can be used to squeeze every ounce of potential revenue from a budget hotel. I think they are generally simpler buildings to construct. They're generally smaller, less complex. So you could say inherently they're a bit easier to get and achieve some of the sustainability criteria that are becoming more and more important. From an operational point of view, there's less to run. There's less complex systems that sometimes would go into some of the more full-service hotels.
Yeah, and you say that it is easily combined with retail project. What are the advice and the recommendations that you can give for owners who would like to develop standalone budget hotels, knowing that in terms of structure of the building, sometimes it is the same thing, whether you are going to build a luxury or a budget, the concrete is the same. So what are specific advice can you, a recommendation that you can give?
Keep it simple. Define the brief from the outset. Invest in a really good feasibility study to start with, so that we know the parameters for investment. Keep the building simple in its form and its function. It doesn't need to be complex for budget hotels. And I think that's probably the best advice. And keep the area program under tight control, and don't be tempted to try and go for the biggest is best. It doesn't always work, and particularly not on budget hotels. I think there's real scope to really rein some of the area in. I think keep a tight control on area is the biggest.
Kostas, please.
Yeah, if I may support this, especially in that 3 to 4 market segment, what I have seen is a lot of projects where the development cost escalates when owners choose to add what I would call bells and whistles. And a good example of that will be a big banqueting space. And the implications of that are significant, because think of a space like this one here. You don't need to build just this. You need to build additional bathrooms, parking, kitchens, storage, which has a significant impact on the total development cost for the hotel. So to support what you just said, for that market segment, keeping it simple is the best possible advice.
It is a very interesting point, because we know that in Riyadh and in Saudi Arabia in general, the banqueting business is very important, and there is this recurring need, wish expressed by investors, to combine banqueting with budget hotels in order to have the best of both worlds. It is, Hassin, in your experience, as you are in this specific segment, do you tamper with the brand specifications or the brand guidelines depending on the market, or you stick to the general positionings of the Ibis, Premier Inn, or other brands? How do you deal with this?
No. Actually, of course, we need to adapt on the market need. Actually, it depends on each market, and you need to add value for the as a hotels, and to add value for the market. For example, in Kuwait, as I mentioned, we adapt with a service apartment for Muscat as well. We have the banquet hall. So you need to adapt it, not just to follow with the standards of the operators as well.
The banqueting point, because it is a very recurring theme when it comes to budget hotels. Do you have in your hotels usually a beefed up banqueting and meeting segments, or you keep it contained?
Most of our hotels, because we are driven by the business and economy hotels, so follow with the feasibility in advance in the market, and with the operators' feasibility as well. Going that we are actually on time. Going that depends on the demand, actually, on the market.
Well, I see that the clock is beeping. Thank you very much, and join me in thanking our panel members for their very frank and then candid contributions. And we will be, all of us, here later, and we will be happy to have a follow-up discussion on all this. Thank you very much.